and taking us through their views on the markets. But on that note, let's shift focus to earnings. We have GHCL, which saw its top line and bottom line drop in the third quarter. What caused the pain, and are things looking up from here on? We are in conversation with the company's managing director, R.S. Jalan. Mr. Jalan, good morning and thanks for taking the time out. Let's address how you are assessing the quarter and the various factors that you may attribute to the weakness here.
Good morning. If you look at Q3 vis-a-vis the same quarter last year, at profit after tax, we have been able to maintain the same number in spite of slowdown in the economy. And our soda ash, which is the main business, our price has dropped by almost around 7%. But we have been able to because of better production cost as well as the better serviceability to the customers, we have been able to gain the volume by 8%. And we have been able to marginalize this price reduction of 7%, where the margin has dropped from 32% to 28%. In spite of this drop of 4%, and there is a one-time we have taken a hit of MEIs, which is an export incentive on the textile business, which the government has withdrawn from a retrospective effect of a 10 crore. So in spite of these two things, we have been able to maintain our profitability at the same level. Thanks to one of the highlights is the corporate tax. And the second one is that our home textile business has done better than last year, same quarter.
Mr. Jalan, in terms of your operating margins, of course, EBITDA for the quarter has also witnessed a decline. Are the trends now looking better in the current quarter, that's the March quarter, or the scenario would continue to be the same? You said there was a price correction of 7%. Are there any changes that the company is seeing now in the current quarter?
Not really. The prices, my estimate is that the prices may further fall down by 2 to 3%. However, we maintain that we will be able to maintain the same margin what we have earned in this quarter. So overall, what we see that this quarter, our chemical business will have the similar margin vis-a-vis the Q3. Textile also we are seeing in the similar situation. Overall, we maintain that this margin will be in the same range.
To 21%, you're saying will be the margin for the entire fiscal year as well on a blended basis?
Not really. In this year as a whole, because the first 2 quarters has been pretty good for us. Overall, if you look at year as a whole, we will be in a position to approximately around our margin will be 24% vis-a-vis last year of 22%. And overall, our profitability will be up by roughly around more than 20% profit after tax.
Okay, sir, with respect to your larger segment, that is inorganic chemicals, can you give us an outlook in terms of, perhaps the orders, how things are panning out, how things are shaping, and what possible repercussions it may have on revenues going forward?
See, if you look at this year, next year, 2021, we see a demand revival in the coming into the industry. Because this year what has happened is that there was a new supply also came in into the industry. However, then no new extra production is coming next year. So we are seeing a slightly better situation in the next year, 2021.
Capacity utilization level, sir?
Oh, currently we are doing great. We have approximately around 96% capacity utilization.
And that's for both the segments, home textiles as well as the inorganic chemicals?
No, this way I'm talking about for soda ash business. And in textile, we have roughly around 50 to 55% of the capacity.
So would we see any sort of increase in terms of utilization level from that segment?
Yes, surely next year we see definitely a utilization should improve in that home textile.
Okay, give us a sense with regard to what's the cash in the books. I believe you guys have also announced a buyback. Will the promoters participate in that?
No, the promoter will not participate. We have announced a buyback of 60 crores at a price of 250 rupees through the market purchase, and the promoter will not participate in that.
And what's the cash on books currently, sir?
We have approximately the debt of roughly around 1,100 crores, which is approximately around 0.45%. Debt equity ratio is 0.45.
Okay.
And we have a sufficient cash on the balance sheet to support this.
Yeah, I just wanted to know what the cash figure is. You're saying the debt is 1,000 crore. What's the cash figure?
Roughly, it should be some more than 100 crores.
More than 100 crore. And you've announced a buyback on top of that. So how are you planning to pay back your debt of 1,000 crores?
See, this year, if you look at in 9 months, we have already repaid my debt by around 200 crores. Okay? And overall, this year, we have generated a cash flow of around 400 crores. So even if next 3 months, if you look at, we will be roughly around generating around 120, 130 crores extra cash generation. So overall, our debt equity ratio is pretty well. And we have reduced the debt by 200 crores in the 9 months itself.
Okay, all right. Well, we leave it at that. Mr. Jalan, thank you so much for joining us and talking to us here on Bloomberg Quint. Wish you the best for the future.
Thank you.
Okay, that's the management of GSCL. And talking about the markets, we're at the highest point of the day, 12,233 for Nifty. I think we'll wrap it up on that note, Agam.
Absolutely. Don't forget, you can, of course, get a lot more information on the futures and options space on our website, bloombergquint.com. But on that note, it's a wrap. But stay tuned to Bloomberg Quint for more news and updates.